Students, welcome to Accountancy class. I am NARSIMULU, Commerce teacher. In this video, I am going to teach you CEC first year Accountancy and important chapter, that is Subsidiary books. In this chapter, I am going to teach you very important topic, that is purchase book. So here in this video, I will explain what is purchase book and what are the things that we consider while recording the transactions in the purchase book and the proforma of a purchase book, and if it is possible, I will explain one example problem also. So these are the things I will cover in this video. Let's start here. That purchase book. So one of the subsidiary book is purchase book. One of the subsidiary books is purchase book. So here there are total 8 subsidiary books. Namely, there are 1 purchase book, 2 purchase returns book, 3 sales book, 4 sales returns book, 5 cash book, 6 bills receivable book, 7 bills payable book, 8 journal proper. So these are the total 8 subsidiary books. So here the first one, purchase book. Here, why do we maintain purchase book in the business organization? See, we use purchase book as a journal to record credit purchases only. This is the important point. So here we use purchase book to record only credit purchases information in the books of the organization. We can't record cash purchases. We can't record cash purchases in the purchase book. And one more point that you have to remember, that is purchase of assets. Purchase of assets cannot be recorded in the purchase book. Assets like machinery, plant, buildings and furniture, etc. So whenever we purchase these assets for cash or on credit, cannot be recorded in the purchase book. This is the important point that we have to note. Next year, while we recording the transactions in the purchase book, we use an evidentiary document, that is inward invoice. So whatever the details available in the inward invoice can be considered to record that information in the purchase book. See, inward invoice. So what are there in the inward invoice? So in the inward invoice, it is a document prepared by the supplier and giving the details about the goods that we purchased and the quantity, quality and total amount and transportation and packaging details. Everything will be given in the inward invoice. So this document can be sent along with the goods by the supplier to us, and this document can be used as a evidence to record the transaction in the purchase book. Okay, so then come to next point, that is trade discount. So here trade discount, it is a rebate that is offered by the supplier on the catalog price to the seller, purchaser. Okay, so it is the discount, means here whatever the trade discount we calculate, that should be deducted from the total purchase price, and the net figure, the net value can be shown in the purchase book. So here trade discount is a rebate that is offered by the supplier to the purchaser on the catalog price. So here that amount, the total trade discount should be deducted from the purchase price, and the net figure can be shown in the amount column in the purchase book. Okay, sir. Now we observe the proforma of a purchase book. So here it is the proforma of a purchase book. There are total 5 columns. First column meant for date, and second column meant for particulars, and third column meant for inward invoice number, to record inward invoice number, and fourth column is meant for ledger folio number, and fifth column is meant for amount. So there are total 5 columns in the purchase book. Okay, so in this way you can go to prepare the proforma. So with the 5 columns, purchase book, on the top of the proforma you can go to write purchase book, and there are total 5 columns. First column is meant for date, and second column is meant for particulars, and third column is meant for inward invoice number, and fourth column is meant for LF number, that is ledger folio number, and fifth column is meant for amount. Okay, so in this way we can go to prepare the ledger proforma and come to here. Let me explain you a simple problem how we are going to record the transactions in the purchase book. See, you will be asked to prepare purchase book from the following. Okay, so date, you will be given date 2019 May 1st. Purchased goods from X rupees 5,000. Okay, on May 6th purchased a machinery rupees 6,000. On 8 purchased goods from Z and trade discount 10%. Here amount 10,000, and date 10th purchased goods for cash rupees 5,000. 15 purchased goods from Raju rupees 3,000. So like the transactions will be given and you are asked to prepare purchase book. So here when we ask to prepare a purchase book, and you can go to draw the proforma, that is important one. Here the proforma you can go to prepare like this: purchase book, date column, particulars column, inward invoice number, ledger folio number, amount. Like this we can go to prepare 5 columns in the purchase book. Okay, so after preparation of that purchase book proforma, now read the points that are given in the problem. So here 4 to 5 transactions are given. First you are asked to prepare purchase book. You already prepared, and see the transactions. On May 1st 2019 purchased goods from X. It is a credit transaction and it can be recorded in the purchase book. So here first in the date column you can go to write date 2019 May 1st. Here just you must not use to or by, just you can go to write the name of a person in the particulars column. Here name or company X, only X name of a person is given, so that you can go to take. And invoice number, assumed number, you can go to give as 1, and there is no use of LF number, we can't use it here. And amount of rupees 5,000. Like this we can go to write the transaction. After writing that and come to second transaction, you observe here on May 6th, purchased machinery for rupees 6,000. It is a cash transaction, and one more thing, it is a purchase of asset. Okay, here we purchase the asset for cash, and this information should not be recorded in the purchase book because it is a condition. Only credit purchases can be recorded in the purchase book, and this transaction will be recorded somewhere else. We should not think of it. So what is the condition? Only credit purchases can be recorded in the purchase book, and purchase of assets should not be entered in purchase book. So omit it and come to third one, that is 8th. On May 8th, third transaction, purchased goods from Z, trade discount 10%. Here trade discount is given, and already I explained, whenever we are given trade discount in the problem, we calculate the trade discount amount, and that amount should be deducted from the purchase price, and net figure can be shown in the amount column. So here date 8. From whom we are purchasing this these goods? From Z. Go to right here Z. How much amount of goods we are purchasing? 10,000, and from that deduct the trade discount. Trade discount at the rate of 10%. Okay, on 10,000, 10,000 into 10 by 100, you will get 1,000. So this 1,000 rupees should be deducted, and net figure in the invoice number you can go to write assumed number, that is 2, and net figure 9,000 in the amount column you can go to write. So here this is the trade discount. Trade discount 10%. So the trade discount should be deducted from the purchase price, and the net figure can be taken in the amount column. Okay, next come to see on May 10th, purchased goods for cash. So when we are preparing purchase book, there are some conditions which we have to follow. First one, only credit purchases can be recorded in this purchase book, and cash purchases must not be recorded. So here on 10th, what's happened? We purchased the goods for cash. It is a cash transaction. It must not enter in passbook, and it can be entered somewhere else. That should not be considered here. And come to next one, purchased goods from Raju. It is a credit transaction. It can be taken date 15, and here you write only the name of a person, Raju, and amount, invoice number 3, and that is the assumed figure we given here, assumed number, and amount is rupees 3,000. Okay, so we completed all transactions we recorded in the purchase book. After recording all the transactions in the purchase book, now you can go to calculate the total. 12,000 plus 17, total 17,000. Here you can go to write total. So total rupees 17,000. Like this you can go to prepare the purchase book. Let me explain you the things once again. Here purchase book is one of the subsidiary books. There are total 8 subsidiary books. They are namely purchase book, purchase returns book, sales returns book, cash book, bills receivable book, bills payable book, and last and final one, that is general proper. So here purchase book. Why do we maintain purchase book in the business organization? So we maintain the purchase book to record only credit purchases in the purchase book. We must not record cash purchases and purchases of assets such as land and machinery, buildings, furniture, etc. Okay, so here that is the next point. And here one more point, that is inward invoice. Inward invoice is a document which is prepared and sent by the supplier along with the goods that we purchased. In this document we can find the details of the goods that we purchased, and the price of the goods, the quality of the goods, the quantity of the goods, transportation, mode of transportation, and packing details. And here that document, the inward invoice, can be used as a evident document to record the transaction in the purchase book. Okay, and next one, trade discount. Trade discount is the rebate offered by the supplier to the purchaser on catalog price. That trade discount can be deducted from the purchase price and the net figure can be shown in the amount column of the purchase book. So like this we can go to prepare the purchase book. So in the purchase book there are total 5 columns. First column is meant for date, and second column is meant for particulars, and third column is meant for inward invoice number, and fourth column is meant for ledger folio number, that is LF number, and fifth column is meant for amount. Okay, so in this way we can go to prepare the purchase book. Students, I hope that you understood what is the purchase book, why do we prepare the purchase book, what is the inward invoice, and what is the trade discount. So all these things you understood in this video. Thank you for watching this video.